Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Starting the week, the Australian dollar has broken down through the trend line and now weighs on the support level seen around the 60-day moving average at 63.80.85. With the support clearly broken at 64.45 to 64.70, the bearishness may hold to the start of the week when the indicators are still remaining somewhat negative. Let's see if the market does display a strong firm bounce from 63.80 where the 60-day simple moving average is, and if so, could see a move back towards the top side of the range around 64.80 to around 65.40.45, which is where the key level is and still holding relatively firm. The dollar index, meanwhile, which measures the greenback strength against a basket of 6 major currencies, has rebounded back to 98.60 following Washington's weekend decision to join Israel in striking Iran's nuclear sites, rising supply concerns as well when it comes to the oil. President Trump said he had obliterated Iran's main nuclear facilities, escalating now Middle East tension as Tehran vowed to defend itself. Looking ahead to this week, the Australian dollar is expected to face more volatility due to the US attacks, and therefore investors will keep an eye also on the US inflation risks from the tariffs. With May's personal consumption expenditure, the Fed's preferred inflation gauge is due out this week, along with the US GDP, housing data, and also consumer confidence updates. Along with this, we've got the Federal Reserve Chairman Jerome Powell, who is scheduled to testify before Congress. Inflation eased in January, potentially allowing further Fed rate cuts later this year, but Trump has also been weighing on the Fed to cut now. Domestically, Australia will release its CPI update with the previous reading at 2.4%, matching forecasts. Volatility is hit early in the week as the euro slipped earlier, while the US dollar remains steady. Nevertheless, this trend line still holds firm, but the technicals have broken down slightly. Let's see how we play into this week with the data and also with the geopolitical risk that may see a bit of whipsaw or volatility. Let's see if this trend line can hold around 113.70.80, and if so, eventually see a move up towards 116 to 117. Dollar yen's volatility rose last week and is likely to remain elevated, driven by Iran-Israel conflict, as well as updates from the Bank of Japan and the Fed. Iran's response to the US strikes could affect markets, while trade and economic data will influence central bank signals, and the dollar yen may find the trend could be to a little bit more to a bullish case since it's elevated above 145. With the break, could see further risk, and that is on towards this key top level at 148, figure 25. But overall, though, I'm still looking for the move down, as the broader case is still holding negative when it comes to the RSI and the MACD. Turning to sterling, we can see the market has broken down following weaker than expected UK retail sales data on Friday. While the US did strike around 3 nuclear sites, the market is still very much tense and therefore seeing what the outcome will be. With all the data this week, and along with that, we've got the Bank of England's dovish hold, could see a mixed reaction from the Bank of England Governor Andrew Bailey when he speaks this week. So far, there is a 60% chance of a rate cut in August. Looking to the technicals, they have broken down, which could see a move towards this trend line somewhere around the region of 132.60.80. Overall, though, bargain hunters are likely to return and still keeping the view from a broader case to 136 to 137. Very mixed and whipsaw price action when it comes to gold, but the technicals and also the candles have remained negative and therefore could still see a downward test towards the region of 3,350. Beneath their stops may trigger towards the region of 3,333 to 35. But overall, though, the market may bounce from there eventually back to 3,400 and the broader call at 3,500. Wrapping up with oil, I'm still holding the neutral view as the market whipsaws and also the break gap rally that we can see here that hit a high of 76.5. It's pretty much hard to trade this market due to the risk that's occurring, but keep an eye as opportunity may return eventually once it starts to settle down a bit. But overall, as I mentioned, I hold neutral for the short term. Well, that's a wrap. Thank you for joining me. And as always, look out for the intraday report. And I hope you enjoy the great start to the day.